yeah, my name's Domenic Carosa. With me today is Holger Arians, our CEO, and Shyam Deo, our CFO. We've just got a few problems in regards to him coming up in terms of his video. So anyway, let's just sort of continue as we are. Moving forward, just to kind of give everyone a bit of an update, what we're going to do is take everyone through a high-level overview of Banxa, and then both Holger and Shyam will take you through the business and the financials, and then we'll wrap up and open it up to key questions. And so there's a Q&A button, so please feel free to basically ask questions. Feel free to ask questions during, and we'll do our best to address every single one. We expect this to go to about 20 minutes, 25 minutes, and then Q&A for about 15 minutes for those that are managing time. So really our vision is about democratizing finance and really onboarding the masses by building the fiat to crypto bridge across digital assets. We're actually the world's first stock exchange fintech PSP, payment service provider, red tech company, and so what we're doing is building the bridge between the fiat world, and when I say fiat, I mean US, Euro, Canadian dollar world, and the digital asset world. And when I say that, I mean Bitcoin, Ethereum, and the other coins. And in effect, the best way to describe the company is we are like the PayPal of the crypto industry. Just from a corporate perspective, we're listed both on the TSXV and the OTC QX, and in Frankfurt. Market cap of around 100 million. Our revenues we're trading about 1.2 to 1.5 times revenue to enterprise value, and roughly $19 million US cash in the bank, with insiders being absolutely aligned with the performance of the company with around 20%. There's about 200 people in the company. So at this point, what I'll do is hand over to Holger, that will take us through the business.
Thank you, Domenic. Hello, everyone. I'm Holger Arians, the CEO of Banxa. Just want to touch on the pillars in our business. We really stress that we do have local payments in many markets and global payments to reach almost everyone in the world where we are allowed to. Local payments are really important for this industry because a local bank transfer is just often more trusted. It's in your own currency. It usually happens immediately, and it goes through almost 100%. So there is less fraud than a credit card payment, and it's just a more trusted payment method for consumers. And compared to a credit card, you don't have to give your details to anyone, and it's mostly free. So we do that in a number of countries, as you can see here, and that's really one of our core pillars, how we differentiate from the competition as well. Why? Because payments are hard. If you want to have a local payment here in Australia, you do need to have a local bank account. For that, you need a local entity, directors, people on the ground. You need to go to the regulators, and that's the next point here. We do have the regulatory licenses, and we're registered with the relevant authorities in those countries that we can perform those services. And it's not just receiving the payment, it's also doing the settlement of the cryptocurrency into the user's wallet. And that's where the virtual asset service provider licenses come in. And we already have a few and are just subsequently getting those licenses so that we can offer those local services. And again, just to draw the bigger picture, why is that important to our partners that we integrate with? Because they rarely want to deal with the old world, the fiat world, the banks, and the regulators. But the moment they offer any payment services, they will have to do transaction monitoring. They will have to receive payments. They will have to do the fraud assessment. They have to deal with chargebacks. So Banxa takes care of all that. It's actually quite hard, which is good for us because we've been doing this for 8 years. We know the ins and outs. We have the connections. We know who to, which stakeholders to engage, and how to process those payments with a very high throughput conversion rate, which eventually is a win-win-win situation. The user wins because their payment goes through and they can get their coins into their wallet. the partner wins because value is being uploaded into their exchange or platform or wallet, whatever they are offering. And certainly Banxa benefits from this as well. So conversion rates, the throughput is really, really important. It's like if you go to an ATM and you're not getting your money out, that's a frustrating experience. But with Banxa solution, especially the local payments, you will mostly get through, are able to convert your fiat to crypto. The third point here, data science automation. We've built our proprietary platform for many years. It's very, very scalable. It's been pressure tested over the last 2 years, certainly. We just continue to build that out. We just hired our chief data officer, who's been head of data at EY in Australia before. And there are just so many efficiencies that we are working on every day. We're really learning what we can do with all this data in terms of customer experience, cost optimization, and many, many other improvements. And again, we're not just processing a payment. We're not a pure payment service provider. We are also settling the coins, and that's also quite complex. We have to source them at the cheapest price possible and the fastest way possible, because crypto should ideally be very fast. So we have to make sure that we get our coins and get them into the user's wallet as soon as possible in the most economical way. And we're working on improving that every day as well. Domenic, if you don't mind going to the next slide, please. Just going to touch on a few points here. I already mentioned that we are basically shielding off our partners from any chargebacks or fraud for the services we're providing. So what they're basically just seeing is their users uploading value in form of coins into their platforms. And that's what they want us to do. So we take care of everything that's happening before. If that is the ID verification of the customer, we check them against sanction lists and political exposure. We do the whole fraud assessment with internal and external tools. And again, our 8-year experience really comes into this here, because fraud is evolving as well. And then we process the payment, again, with a very high conversion rate, because we offer local payments. And then we do the settlement of the coins. So this whole process is what Banxa is doing. It's quite complex, but our partners really appreciate that we do the hard work, and that they can then continue working in the blockchain world and innovate there, while we connect the old world with the new world for them. Dom, to the next point, slide, please. So we've just been continue building our portfolio of partners. We focused really on the big end of town, but it's a long tail of the market, because that's where most of the volume is. And if you think about it, those global exchanges, let's take a Binance, for example, it doesn't make too much sense to have local entities and local payments in all those countries. It's not scalable for one business. Banxa can do that at scale, so that the industry can piggyback on our licenses, on our payments. So again, we're building the infrastructure, the plumbing of this industry. And I think that's really what the partners appreciate. And that's where also some of those partners have backed us financially in the early days. So we share this mission of really building the infrastructure and connecting the old with the new world. Dom, to the next slide, please. Just an overview of our growth strategy. We really just want to go much harder into the execution of onboarding new partners, increasing our TTV. We are going into new geographic expansions. I've seen that was a question from Usama. We'll get to that later as well. We really want to be more local, the localization of payments of our services and getting the required licenses in many more areas. Currently, we're working on LATAM, which is a very big territory and has a very high crypto adoption. So we're setting up people on the ground to have those payments and licenses in these areas, certainly looking at more penetration into Asia as well. So there's a lot happening. And I think that's just going to strengthen the core of our business.
Yeah,
yeah,
sorry, go ahead, Holger.
No, just to the last point, and Usama, you also asked, or it was someone else. I've seen the question about, are you going into other segments or verticals? Absolutely. So what we're doing is we really just do the conversion of your fiat currency in the safest way, and then we connect all those platforms out there. Today, there are mostly centralized exchanges because that's just where the industry has gone so far. But then we've seen the emergence of NFT platforms. We've seen decentralized finance platforms. We've talked about the metaverse, whatever that eventually is. But the reality is we need to build a bridge to those use cases. And for banks, it doesn't really matter what the use case is on the other side. We do our bit on the way in and out. We do the conversion, the settlement of the currency into that platform, whatever the platform is doing. So we're creating these connectors, we integrate with all those sectors. Blockchain gaming is another one which is emerging. And if you ask me, we're just at the very, very beginning. So if you look at on the right side here, I think in total crypto today is a $2 trillion industry. Apple, which is just one company, is a $3 trillion business. For everything that crypto can do and can replicate in the digital asset space, there is going to be so much more, is my personal view. So we have set the foundation. We started with 50 people we came with 50 people into 2020. We're now 200 people. And I think we're now at full force to really go out there and sell much harder and get our product into the market. So very optimistic. With that, I guess I'm going to hand over to Shyam for a financial perspective. Thank you.
Thank you, Holger. And hello, everyone. My name is Shyam Deo. I'm the Group CFO at Banxa. And I just wanted to share with you today, how the numbers are represented in terms of what Holger and Domenic have mentioned so far. So you've heard about the growth strategy and the focus that Banxa has had, and there's been certainly strong focus around the partner and volume expansion, as well as coupled with the market tailwinds, which has allowed us to achieve a record quarter of TTV in December of approximately 600 million. This is also translated very positively for Banxa in terms of our half-year revenue number of 40 million. And as you can see on the chart on the right-hand side, that approximately achieves close to 90% of the full year FY21 revenue in our half-year period. Just moving to the next slide, please. So in terms of financial highlights, the top line has been a strong focus for Banxa in terms of acquiring new partners, as well as expanding the existing partner user base. And this has all translated into a very stable and expanding liquid asset profile for Banxa. So as of December, we had $26 million worth of liquid assets, comprising of cash, deposits, and digital assets. And these are the funds that Banxa utilizes to fund our trade working capital requirement to expand and grow the transaction volumes that you see today. In terms of the bottom line, the statutory loss of 3.1 million. This includes various non-cash items, approximately close to 4 million. This comprises of various provisions and share-based compensation for management team as well. So just moving on, I do want to step through the three key statements. So starting off with the profit and loss, main point here perhaps to touch on is the net take rate, which is really the expression of gross profit as a percentage of our TTV. The net take rate is at 1.9%, and it's largely based on the geographic mix and the optimization that Banxa has been able to achieve in the current period compared to the same period prior year. In terms of our continued investment in OPEX, Banxa has continued to invest in products, talents, and systems. This has resulted in our OPEX spend increasing to about 17 million. However, this is in line with our transaction volume also. So on a like-for-like basis, it represents about 2% each period of our total transaction volume. Employee costs remains a dominant feature, and we continue to invest in our team. So employee costs for OpEx is roughly about 60%. And this is largely underpinned by our headcounts. Holger's mentioned we had roughly 200 employees. This is a 3x growth on the same time prior period. And finally, the adjusted EBITDA loss of 2.5 million. This period we're impacted by 3.8 million in terms of FX losses. And this is largely derived from the fact that Australian dollar depreciated against some of the major currencies that we transact with, predominantly Euro and USD. Moving to the next slide. In terms of the balance sheet, and I'll predominantly focus on the chart highlighted in the red text box. As I mentioned, liquid asset is our core focus. It's got a composition of those various items, and it's stable and expanding at 26 million. In terms of some of the other key metrics to observe is the net working capital at 19 million. And moving further down is a quick ratio. This has come back somewhat to 3 times, and that's largely the factor of, as the business is expanding, we're carrying greater liability associated with employee entitlements and tax provisioning, but still a very healthy quick ratio of 3 times. And the final point here is around the debt equity ratio of 0. And I think the key point here is Banxa at present point has a debt-free balance sheet, and that largely can be credited towards our liquid asset position, which we've maintained and expanded to then for it to be utilized to fund our trade working capital requirements. Okay, great. Thank you. For the next slide. And finally, the cash flow. Great place to start on the cash flow is, as at the end of December, we had close to 14 million of cash. This is a 4x growth on the same time prior period. A key point to mention here is cash excludes deposits held with exchange, and deposits held with exchange are denominated in various fiat currency as well as stable coins, which Banxa utilizes to fund, as I mentioned, our trade working capital. Should this be reclassified as a cash, you would have a situation where the adjusted cash from operating activity would be a positive representation of 1.5 million. So all in all, strong 3 financial statements for this period end. I'll pause there and I'll pass it on to Domenic.
Thanks, Shyam. By the way, keep those questions flowing through because we'd love to interact with as many people as possible. So really, in summary, and I'm not going to go through every point because I'm just conscious of the time. If you believe the hypothesis that Bitcoin and crypto and NFTs and metaverse and this whole ecosystem is here to stay and will continue growing, and the statistics certainly back that up, then companies like Banxa that are providing the bridge between the fiat world, where the majority of people exist, to the digital asset world will be, in my view, companies that will prosper. And just to take a step back and just give people some, I guess, an overview of the market. For the last 8 to 10 years in the crypto space, it's predominantly been what you call the early adopters, the crypto nerds, the tech nerds, such as myself, the finance nerds. And what we're really starting to see is that crypto in this ecosystem is now starting to become mass market. And you only need to look at the NFT and the gaming and the metaverse space, which illustrates that. So this is really the next big wave of growth, and I really echo Holger's point around we're just really getting started, or this industry is just getting started. So maybe at this point would be good to I'll stop the presentation. We'll try and take some key questions. I may actually get the deck back up to be able to answer some of those questions. Andrew asks, can you shed some light on NASDAQ? So Andrew, thanks for that question. It's a work in progress. In fact, I spoke to our legal firm earlier this morning about it. They're in constant discussions with both NASDAQ and the SEC. And all I can say, it's a process. Banxa belongs on NASDAQ. We will get there. It's just a process that we need to go through. I'd expect this half for that to come to fruition. Astro asks, how are you planning to increase institutional ownership of the stock and be included in various ETFs? Astro, I think I think the point around NASDAQ partly answers that question. For 2022, we've also engaged with new investor relation firms in the space, and you're going to see us becoming much more active. In fact, next week we're at a conference, and I think we've got conferences most of March and then moving into April. So I'd expect us to continue increasing our visibility. And he also asks, what are you doing in terms of analyst coverage? We actually now have a couple of US firms covering us. Lake Street was the latest one that came out. And if you want to drop your email or drop me an email, you got my email address in the deck, which you can download from the website. I'll add you to the list and send you out some latest research reports. Sam asks, maybe this is one for you, Holger. Do you have a number or ratio of what on and off ramp market is since it has been launched in relation to TTV? So I think he's asking maybe in relation to us or maybe the industry. Maybe you can shed some light there, Holger.
Yeah, absolutely. There is no specific number on fiat on and off ramp value available. We certainly just have that from our own experience. What we're seeing though is from inside our partners, so take a Binance or KuCoin, how much of the market we have there, because we know how many users they are, how many users we have, and the reality is just a fraction. Again, we're just starting. The more payment methods we roll out, the more we're able to onboard users in local areas. So as an example, we're setting up an entity in LATAM, in a specific country there. And the moment we're able to process those local payments in the local currency with a bank-to-bank transfer, again, much more trusted, and usually no fees compared to a credit card, the platform or partner Binance can then promote that to their users in that country. And they will be able to just onboard locally. What they've done so far is either they have to swallow the pill of making a payment, a credit card transaction, which is very expensive, or what they do is they do the local bank transfer with a local exchange, because the local exchanges are on the ground. They offer this, and then they send their crypto from there over to the global platform, Binance in this case. That takes time. And it's costly because it goes on the blockchain. So there are a number of transactions involved, which we will then eventually cut out. So we really want to have the direct onboarding. So unfortunately, I mean, the moment we get this number from market intelligence of off-ramp volume, we'll certainly share this. But at the moment, this number is not available.
Okay, thanks, Holger. Max and a couple other investors asked with TTV for January being 169 million. What should investors be thinking for the last 2 months of the March quarter, so February, March? And I think Nicholas also asks, we've noticed that March Q trading volume on the exchanges has been weak across the entire industry, even though January numbers good. How's February, etc. Now, obviously, we can't go and provide any information that we haven't provided in the public domain for obvious reasons. Suffice to say, we trade in line with, there's a couple of key metrics, and Holger, feel free to jump in. One is the volatility. Is the price stable? What's the exchange volume? What's the price of Bitcoin? How fast is it going up and how fast is it going down? Geopolitical. So there are many factors that affect it. And as you saw in 2021, we had a quarter, and then that quarter was down, and then the quarter after that was double that other quarter. So the whole sector is quite volatile, and that's just not us, that's just the industry. But I think if you take a longer term horizon, my view is it's all the way up. It's like the Bitcoin price, and we can talk forever about the whole Bitcoin price and the long term potential. Holger, anything
just
else
to add? Yeah, totally. That everything you said is right, exactly right. And I think if we look at the technology and the evolution of the technology, and take again this long-term view that you mentioned. We're just really at the beginning. Last year we saw the emergence of NFTs, although they've been around for 2 years already. Before that, there is a lot more coming. NFTs, from what we've seen so far, just scratching the surface again. Right now they're being used for collectibles, digital art, but they're representing digital property rights. So they can go in any other area, and we're seeing that with more platforms coming out already. If it wasn't for NFTs and all other technological innovations in this space, I'd say that the last 2 years were really, really amazing. And now there is not much coming, but the NFTs are really building the bridge to the mainstream adoption. It's probably for the first time in crypto, the consumer case that most people understand. Cryptocurrency was always very, very technical and nerdy. But now for the first time, there is a use case for consumers for the mainstream adoption. That's what Banxa does. We're onboarding the masses to crypto. So we will see much, much more of that. And even if there is, there are tensions in the world right now and in the global markets, we're taking a long-term view. The infrastructure is what's really supporting this whole industry, whatever is going to be built on top. So lots of confidence here.
Fantastic. And Max asks, should investors continue to assume a 4.7% run rate to revenue for the rest of FY22? Shyam, maybe this is a question for you, noting that we obviously can't provide forecasts to the market.
Yeah, thank you, Dom. I think in regards to the gross take rate of 4.7%, there's certainly a number of different dynamics that underpin that. We monitor that internally quite closely. And in terms of going forward, we'll continue to monitor that quite strongly internally as well. That said, there's areas within that gross take rate where Banxa has great opportunities and levers to manage that for the future periods. So we're comfortable with regards to the 4.7 that we've been able to achieve to date.
Excellent. And Nicholas asks, how many countries are you operating in, and how has that changed over the last 12 months? And also questions around, the coins and the coins expansion. I think it's maybe worth Holger talking about, the philosophy and really the big push in terms of layer 2, and maybe just to give people an overview, what are layer 2 coins and why are they important as part of the ecosystem?
Yeah, totally. So number of countries we're operating in. We do have local teams on the ground in Australia, in the Netherlands, in Lithuania, licenses in the UK, or registrations and licenses in the UK, in Canada. And we're just rolling this out in a number of other regions. However, we're only getting those licenses and registrations if they're needed to have a local payment. So there are countries that do not have regulated this space yet. We all know it's going to come, and that's what we're prepared to do. But for us, most importantly, is to have those local payments, and to do those, to offer those, ideally without having a local entity, without having to obtain a local license, so that we are just quicker in those markets. So that's really what we're looking for, to go into many more geographies. Where can we offer a local payment today? And where do we need to set up a local entity? And where do we then need to obtain a license or registration? So there is a lot in the works in the background. I'm not going to go into detail into which countries those are, but again, the regions are certainly LATAM, because it's a very, very big territory with high crypto adoption. Asia Pacific, again, and we just want to be fast. That's most important. So we're working on all those fronts at the same time. In terms of layer 2, what we've been pioneering really is to offer people the way into crypto, and layer 2 has just emerged as Ethereum as a smart contract platform has faced scaling issues. The transactions, there are only 30 transactions per second or so that are coming through. And with the adoption, certainly, of NFTs that are built on the Ethereum blockchain, there's just been a lot of congestion and high gas fees, transaction costs. So a number of solutions have emerged, alternative layer ones, which is an alternative to the Ethereum blockchain, and layer twos that build onto the Ethereum blockchain. And as I said before, Banxa just connects the old world with the new world. So we just do the connectors into those new blockchains, offer those coins directly so that people don't have to do the hops themselves between blockchains and coins. And that was quite complex before. Now people can go into those various coins directly. And just to add to that, there's another question about how many coins and chains do we have? Today we have around 80 coin and chain combinations that we're offering. And there was also a question about our customer count. We call our customers partner on that level. We're a B2B2C business. So our partners, last time we mentioned we had 80, now we're at 100. 100 that we have in total. Some of them, well, all of them signed, but not all of them live yet, because there's certainly a bit of a backlog with the integration due to high demand. But we continue to build out our dev team, customer support team. That was another question from Astra, just to cover that one. Astro, sorry, about there were some users waiting for Banxa to respond to them. Our average response time is 6 hours. And if they're not hearing us for days, that's an issue we have to really look into. And I'd love for you to maybe get in touch with me after this. But our average response time is 6 hours. We want to drop that to 1 or 2 hours, because that's just what I would expect. But why are people getting in touch with us? Because their transaction has stalled, because we need extra KYC documents. We're heavily regulated in many markets, so we do need to do the right thing. And there's unfortunately a bit of back and forth involved with the customers, and sometimes those emails might end up in a junk folder. But that's pretty much what's happening. And we just continue to optimize our service all across the board. So I've probably touched on a few questions here, but I hope that I gave you the answers you were looking for.
Fantastic. Thank you, Holger. And he asks, given the low share price, are you looking into a potential buyback of the Banxa shares, which could be highly accretive? And when are we targeting positive earnings? I'll address, I guess, the first question in respect to a share buyback. We do have a board meeting tomorrow, and in fact, I'm sure that will be one of the topics that would, you'd expect a board in this current position to discuss, particularly when it feels it's undervalued. And I guess your next question around positive earnings, as Shyam mentioned, over the last 12 months, our cash has remained stable at around 18 to 19 million US cash in the bank. Even though we've grown the business, 3-4x, we've grown our team 3-4x, and so in that respect, to a degree, we're kind of self-sustaining, and so in that respect, to take a further step back, the objective is really a land grab. And if we wanted to move the company, and I sometimes get this question from investors, what happens if we enter a bear market, a crypto winter, which we've seen before? We've done it before. We've been here for 8 years. This is not it wouldn't be the first. We're able to effectively scale back, move into profitability mode. But our view is this whole industry is going to continue growing, notwithstanding some of the geopolitical issues that are currently going on. There's a lot of growth in NFTs and metaverse and decentralized finance, or sometimes called DeFi, that this whole industry is going to continue growing. I mean, I'm very bullish in the fact that, from an industry perspective, I think it makes sense for people to be bullish. We've maybe got a time for a couple more questions. And he asks, what solutions have you found to increase the volume? And I've had there was another question coming through about NASDAQ. Someone who maybe came in a little bit later. We are working on that. It's a work in progress. Expect to occur sometime this half. And he asks, are you positioning yourself for an inbound sale, et cetera, et cetera? end of the day, if something comes up, we'll obviously announce it to the marketplace. But right now, as we say in Australia, head down, bum up. We know exactly what we need to do in the industry, and it's just really about continue to provide really good customer service, continue building the bridge, doing all the things that we've been doing over the last couple of years. So I think really at this point we're been going for 40 minutes. I think this is a good time to do a wrap. I'd like to thank all of our shareholders and stakeholders who have joined the webinar, and thank Holger and Shyam as well. Good day, everyone. Cheers.